Good morning and welcome to Bazaar Morning Call. This Monday morning, I am Anuj, with me, Prashant and Sonia. So we have a full house and this is a very big week for the market for two reasons. A, this is expiry week, and B, globally there's this Jackson Hole Symposium which is extremely important for the market. And in that context, I just want to present a couple of charts which look very interesting because sometimes pictures tell you a better story. This is the Nasdaq. You see, it's the perfect 200-day moving average reversal that you are seeing seeing signs of that once again. And if you look at the Nifty, the channel that we highlighted last week as well on the Nifty, and if you see that line, we had broken it on the upside. Now we are just at that on the downside in this channel. So it will be interesting to see if the market is at some kind of inflection point or was Friday just a pause in this rally. We'll find out, of course, soon enough. Guys, hi, good morning.
Hi, good morning. Good morning, Prashant. Morning, Anuj. Of course, I mean, there was a wave of profit taking that you saw, right, in the global market. So that seems to be the key highlight. The Dow was down almost 300 points on Friday. And of course, this week, the big event to watch will be the Jackson Hole Symposium that kickstarts on Thursday. So we'll keep an eye out on that, what they say about inflation, about rate hikes, etc. But in our own markets, give and take everything, there was still very large buying that you saw by FIIs. FIIs bought over 1,100 crores. So the money is coming in thick and fast. No two ways about that. The market ended its 8-day gaining streak on Friday. So yes, Friday was a down day. But let's not forget that we've had big gains under our belt. It's almost a 4% rally in August so far. For the Nifty, it's almost a 5% rally for the mid-cap index. And we're not even 5% away from the 52-week high. So all in all, I would think that even if there is some kind of profit taking, we're still closer to all-time high levels, 52-week high levels. So perhaps in this bull market, there are some pauses that could take place, right?
Yes, Sonia, on Friday I made this point that there'll be one dip which may not get bought, while the market has been buying on dips, and it played out on Friday itself. So in that sense, the big question that I asked even on Editors Roundtable is, has the market made a lower top? It's been that kind of a market, very funny market. It just moves one way. It just doesn't stop on the downside, on the upside. I think the most important cue to watch is both the dollar index and also the bond yield. The dollar index is at 108.3, very close to recent highs, and the bond yield is very close to 3 in the US. And the Fed members have been hawkish ahead of the Jackson Hole Symposium, which is August 25 to August 27. Now, on Friday, I spoke about the overbought nature of the market and the fact that even the 5-day exponential moving average and the 10-day exponential moving average are very stretched. We closed below the 5-day exponential moving average. The next level to watch is the 10-day exponential moving average. Where does that come in? 17,645. That is where perhaps the Nifty may attempt a recovery. The 20-day exponential moving average is 17,317. So let's see if there's a bit of a mean reversion trade which comes back. Now, FI is bought, but they created some hedges via futures market, which may not be the worst thing in expiry week if you're a bull, because that means that at least there are some shorts which are coming back in the system. And if the market holds that 10-day exponential moving average, then there could be some short covering. The only reason which makes me a bit nervous from the market point of view is the way Friday's fall was led by Bank Nifty, which is the market leading index. When the market leading index leads the fall, just want to keep an eye on what's happening over there. So that's why you'll keep an eye on that. And let's just revisit those charts, because the Nasdaq is showing reversal from the 200-day moving average, and our market has shown very strong correlation with the Nasdaq. That's the Nasdaq. The points that have been highlighted are the 200-day moving average, and that's the channel where you're seeing the decline from. But Prashant, morning. How was your birthday, and what did you read over the weekend?
Oh, it was your birthday? I didn't know that.
Homebound.
Over the weekend.
And yeah, Saturday. So yeah, nothing. What do you do? Unless of course you head out.
40 is a new 30. You know that, right?
But
considering you turned 40.
But past 40 is over the hill. So 40 is done and dusted. Anyway, let's quickly run you through just a couple of things very briefly. I think the most important thing, of course, is the channel, which Anuj was highlighting. I put that chart out the week before last on Editors Roundtable as well, which is there are two channels. One is from the all-time high of 18,604, which was made in October of 2021. The other is a falling trend line from the Jan of 2022 high. The bigger trend line on a daily basis is gone. Which of the Friday price action broke through, cut through, and we are right above the smaller falling trend line, which is from the highs of Jan 2022. So this is an important zone for the market we need to watch out for. Two other things. So that's the Nifty. Dollar index is finally starting to look like it's coming alive, right? I mean, it was higher on Friday. It's past the 108 level. And this after on Thursday, the dollar index completed what is a double bottom formation. So targets, once again, those who've been waiting for the dollar to break out, etc., will tell you that it'll probably head to 109, 109.5 first, but eventually 117, 118. Well, that's some distance away. Did not happen the last time. We'll see what's the situation, how it pans out now. But generally for equity markets, for the world outside the US, emerging markets, etc., you want the dollar lower, not higher. So again, a monitorable. And thirdly, oil prices, both Brent and WTI seem very, very oversold. Without going into details, just two things. We had Brent oil prices, which did not see a weekly close below a long-term average, 55-week moving average. This is on Friday. WTI prices, by the way, closed above the 55-week moving average for the second week in a row. So again, I mean, oil also seems to be coming alive at the margin. I mean, so Nifty on the lower side, watchful, or dollar and oil prices on the upside, I think you need to be a little more watchful. Are some of the macro-ish kind of drivers for markets making a comeback? We'll find out, I guess, over the next couple of days. Sonia.
Okay, absolutely. Big macro, big global week, right? You have the Jackson Hole Summit as well. I mean, at the end of the day, it doesn't really matter to global equity investors, is my opinion, because for so many years we've been tracking, it doesn't really move the needle too much, but it'll give you a sense of at least what people are thinking as far as the US economy is concerned. By the way, you didn't tell us what your birthday wish was.
Do they still have one?
Why? With age? What happens with age?
Now I'll think about that.
I wish you lots of good global updates.
I wish for good sleep.
He shares his birthday with very prominent people.
Really? Like
Narayan Murthy and Shireen Bhanapur.
Okay, wow. Great minds think alike, huh? And are born alike in the same day, perhaps. But you know what? After the show gets over, you can tell me your age. I'm sure you don't want to reveal it on the channel. Okay, well, lots of stocks to watch out for. There is a FTSE rebalancing impact that would take place today. So very quickly, I'll just tell you about the stocks. The prominent ones that will migrate to large caps are the ones that have been doing really well. Tata Elxsi, there's TVS Motor, there's Varun Beverages, there's HAL as well. So keep an eye out on that. And the prominent ones that will migrate to the mid-cap category from small cap are the likes of Indian Hotels, Gujarat Fluoro, which has had a great run, Linde India, Schaeffler India and CG Power. So we'll keep an eye out on these names. But let's tell you what you'll get to see in the next 2.5 hours. On the equities front, Surendra Goyal of Citi says the Nifty is already up 11% in the last 1 month on returning FII inflows, margin expectations, improving commodity price decline and decent growth outlook in sectors like autos. Nifty valuations now look high on both absolute and relative terms, and consensus earnings downgrades may yet persist.
Okay, let's get you some money market views then. B. Prasanna of ICICI Bank says that the dollar rose against major currencies backed by hawkish Fed commentary, higher US yields and impending natural gas crisis in Europe. Asian currencies led by yuan weakened owing to growth concerns in China. FPI inflows and RBI intervention helped rupee remain in a range. He sees the rupee trading with depreciation bias within 79.5 to 80.5 for this week. So that's a large range.
On the bonds, we have B. Prasanna, who says that global yields have inched higher due to hawkish commentaries, while domestic yields got support from lower crude oil prices and new 10-year benchmark MPC minutes, which are pointing towards gradual hikes post front-loading done so far with an eye on inflation. He expects the 10-year benchmark to trade between 7.2 to 7.4. That's the range.
Okay, and we have lots of stock-specific action to track today. We'll get to that in just a bit with our special top 10 segment. We are looking at names like Shilpa Medicare, GMDC, Wockhardt, Adani Power, Greenlam Industries, Paytm, Tanla Platforms and AstraZeneca. That's on our radar on the back of positive news flow. And Kotak Mahindra Bank and Insecticides India are stocks that are likely to open in the red today. We'll tell you why very soon.
Okay, our global voice is ready with us as always. Lawrence Belanco of CLSA is now joining in. He's, of course, their chief market technician. Lawrence, great to have you with us here on the program. Thank you very much. Lawrence, you believe that we are on the cusp of another turn, a turn lower this time? I mean, if you will explain that, please.
Yeah, absolutely. Unfortunately, we've seen this pretty broad trading range for the Nifty year to date, roughly 15% wide. So we've really traded between 16,000 and 18,000 year to date. And the rally that we've seen off the June lows is now taking us into that resistance zone, which is basically the highs that you made back in March and the highs that you made in January. And in conjunction with that resistance area, we have some of our shorter term indicators flashing buying exhaustion, so that comes from our DMARC indicators. So we do think there's a downside risk for a correction within that range that you've seen year to date.
Lawrence, good morning. So your DMARC 9 signal, right? That's what you referred to, and with the RSI where it is, you believe we are at some kind of a top and maybe reversal like we saw in the previous three tops. But does that mean that the market will make a lower bottom as well, or is this for now just a call on the exhaustion on the upside?
Yeah, so I think we need to be aware that the upside risk isn't attractive here. And even if we just take it to the midpoint of the range, we have greater downside risk being capped at the 18,300 area. And our view for US markets is that we do think we retest the June lows, which does leave the Nifty vulnerable to fall back to that 16,000 area, which is where we've seen the lows develop in June as well as back in March. So there's definitely a risk of falling back to retest the lows. We think that is a likely event basically going forward. And the best case scenario is actually to find support at the midpoint of this range where the 200-day moving average sits, and that's roughly at the 16,800 area.
Okay, so you're saying that there is a risk that the Nifty falls to 16,000 in the near term, but that's not your base case, right?
That's right. Yep. So base case is that we have a 5 to 8% correction, which puts us roughly back in the middle part of the range.
So your base case is there's a 5 to 8% correction. What happens then? Once this medium-term pause or correction is out of the way, do you see a big rally towards the end of the year or not quite? I'm asking for the Nifty particularly.
Yep. So for the Nifty, and assuming our roadmap is correct that we hold above the 200-day, so we get a higher low within this trading range, we should see a fourth quarter rally that then breaks above the 18,300 area. And we can then see a confirmed breakout and an extension of the longer term uptrend for the Nifty. And we can talk about targets of 20,000 plus. But the key thing is how we correct, how deep the correction is through this month and into October. And assuming we hold the 200-day, that's where we can have a far more constructive view for the fourth quarter and the start of 2023.
Lawrence, you said your base case is that in the US, indices go back to June lows. That's the base case, right?
Yes. Yes.
Right. I mean, if that were to materialize, you don't think, the extent of the pullback will be pretty similar or maybe even more in many markets?
Yeah, I mean, it's an interesting question because if you look at the regional markets and the correction from January through to June in the US, Indonesia didn't make new lows. If you look at the Nifty, we've essentially been trapped in a trading range, rather have these distinctive downtrends as you've got in the US in its correction. And Japan's another market which has essentially been range bound all year despite the new lows that you had from the January highs into the June lows for the US market. So there has been a distinction in the way global markets have traded versus that US setup. I think in absolute terms, we obviously can't get a breakout with weakness in the US markets, but on a relative basis, we can see some of the regional markets fall less than the US. I think that's a key distinction that we can make and have made year to date.
Lawrence, okay, so on the NASDAQ in particular, since you referred to it, how important is this 200-day moving average area? Because that's the lead indicator for a lot of markets. Most of the markets are correlated with what's happening in NASDAQ.
Yeah, but I mean, again, if you look at Nifty, you're above the 200-day. If you look at NASDAQ, you look at S&P, they all failed at the 200-day, right? So again, there is a difference in the way these markets have traded. But going back to your question on the NASDAQ, classic bear market rally failed at the 200-day. And again, we think we go back and at least retest those June lows on the NASDAQ. If you look at some of the unprofitable tech indices, or if you look at the ARK Innovation Fund, they didn't even get back to their 200-day. They've rolled over and actually peaked a week before the NASDAQ peaked last week, so leading the market on the downside again, and again expecting new lows for the unprofitable tech and the innovation type side of the market.
So coming back to India, Lawrence, you said that there's a downside risk of around 5 to 8%, which is your base case. What do you think could lead it there? Are you looking at banks, IT, Reliance Industries? How are you, gauging the leaders now? Where do you see the weakness coming from?
Well, I think one space that's been a great outperformer where we think we should take some profits is on the auto space. That led the breakout, was one of the key sectors performing since the June lows. So I think on the back of profit taking, you could see the biggest short-term correction there. And then following that, banks have also been extended short-term. So we're talking about the short-term extremes in the move up, but banks can also see a pullback after their recent breakout. The longer-term profile, and we continue to say this, we think the Nifty Banks Index is one of the key longer-term leadership groups, but obviously in the near term, we think the autos and the banks is the resultant of the pullback that we see from these short-term extremes that we're getting.
Got that. Lawrence, two other variables. One is the dollar, the DXY. Do you think it's breaking out? And the other is our oil prices. What's your view there?
Yeah, I'm going to start with oil because it's a clearer setup and more conviction on this. Basically, the correction that you've seen in oil has found pretty good support. And this is, we're talking about the Brent levels in the higher 80s, lower 90s, and we've essentially got a stability in a short-term double bottom pattern forming there. So we do think that oil is now stabilizing in the higher 80s, lower 90s, and the upside rebound is basically back towards the 115 area. That's within the context of a trading range that's developing between the higher 80s
115,
and 120, 115.
Yeah.
Okay.
So, yeah, go ahead.
Go ahead.
No, I was going to finish off with the dollar index. That had corrected back to the 50-day. That's where it's found support. It has rebounded off that, and essentially looking at the continuation of the uptrend developing on DXY. And for rupiah, there's no change in our view. We think that does weaken towards the 82 area.
Okay, the other interesting, I think you track this, Lawrence, right? The US bond yield. And that's also sort of reversing, right? Almost back to 3 now. What are the charts indicating here?
Yeah, key points. And this was one of the distinguishing features why we thought the rally was coming to an end is basically bond yields stopped declining on the 1st of August, and equity markets essentially had an extra 10 days of trading higher while bond yields had started to rise again. And that rise in the 10-year yields taken price action back above the 50-day moving average, and looks like we're set to retest the 349 level, which was the highs made through June. So we should see an extension to that. So again, that's another factor why we think equity markets need to pull back and pause here.
You did say that you recommend taking profits in the auto space and in banks back home in India. What about spaces like IT? There's been a big reversal over there as well, but now some of these stocks are coming back into action. What do you do here with the large cap IT names?
Yeah, I think they've started to stabilize really after big declines. So it was one of the key drivers to the downside in the sell-off from the January highs. But if you look at some of the large cap names, you've actually started to see some stability and a trading range develop there. So while they pull back, they're likely to pull back within their trading ranges. So you could get some relative outperformance, but they do pull back with the broader market within trading ranges and shorter term trading ranges after the big sell-off that you saw from January in the tech space.
Are there any good places to kind of hide, for the lack of a better word, here in India? Any sectors which are looking relatively stronger?
Well, again, that tech side would be a place you could hide into on a relative basis, that they start to stabilize at this point. Out of the large cap space, that'll be the one that I think you could hide in, yes. And if you look at energy, it's really dominated by Reliance. It's another place that it's very much a trading range that you can hide in from a relative perspective because it holds that range.
Okay, Lawrence, we'll leave it at that. Thanks a lot for joining us and giving us an update on the markets and where the markets could head from here. So that's Lawrence Belanco of CLSA saying that there's a 5 to 8% downside correction that we could be staring at. The base case, that's the base case, a 5 to 8% correction, and if it gets worse than 16,000 perhaps is the level to watch on the index. The SGX Nifty is suggesting that the start will be mildly in the red, But I don't think that should be such a problem because we've had big gains under our belt. So let's see which way it goes. Our team is here to help you with the list of top 10 stocks as we kickstart trade. Anuj, what are you looking at today?
Sonia, the important issue here is the decline in Nasdaq and what kind of impact it has on the IT stocks, because on Friday they were strong. This view on one side and this price action on the other side. Both Infosys and TCS are now trading above the 100-day moving average. So do they go to 200-day moving average like Nasdaq has done and then reverse from there, or do they reverse from here itself, or do they not reverse? And that's also a possibility, right? But I think for me, while the Bank Nifty was weak on Friday, and the index to track is IT from here on, and hence I'll keep an eye on both TCS and Infosys.
Okay, all right, Anuj, thanks very much for that. In IT stocks in focus, basically. Shilpa Medicare has got news flow. Ekta is here with more on the same. Ekta, hi, morning.
Thanks for that. Well, yes, I expect Shilpa Medicare to probably be in the green today because they've completed phase 3 human clinical trials for their biosimilar adalimumab in the Indian market. So that means that this biosimilar, if it gets the go-ahead from the government, from the regulators, then it could probably be launched in India. It is indicative of the fact that this particular biosimilar, which is used for conditions such as arthritis, psoriasis, ulcerative colitis, is indicative of Shilpa Medicare's ability to actually develop biosimilars, and hence that could be a larger positive for the stock. It's a $19 billion drug, and they are launching it in a higher concentration in India vis-a-vis what is already available, and it just gives light to the ability that they have within the biosimilar space, which they have said they are currently they are developing a portfolio of biosimilars at this point in time. So I expect the stock to be in the green.
Okay, that's on Shilpa Medicare. Let's go across to Nigel, find out why he's watching GMDC this morning. Nigel, over to you.
Well, GMDC's numbers look pretty good. And remember, we here at CNBC-TV18 had put out a piece on GMDC on our show Inside Out. The street was fretting about various fears, but at least in the first quarter, they weren't evident. And, the management is sounding reasonably confident as per their con call as well. They say that the lignite business will achieve volumes of close to 10 million tons odd. The EBITDA per ton will be at record levels. The power business, remember in the past, that's been a bit of a drag. That's turned around, and they're expecting things to improve from here on. They're appointed BCG. Now, there are some recommendations that are coming, and they have been implemented. Also, they say that there are various ancillary mining opportunities that are there. So they're looking at putting that as well to work. So that as well is an incremental positive because of that rare earth opportunity that they've been talking about for a while. Edelweiss, post the con call, they continue to remain positive on the stock. They have a buy rating with a target price of around 230 rupees per share. Back to you.
Okay, thanks for that. Well, let's welcome Nimesh back from his holiday. Nimesh, you're looking at Kotak Mahindra Bank this morning?
Yes, Sonia, and in fact, the stock may react a bit negative because the street was anticipating that the stock will be added to the FTSE semi-annual review in the FTSE index. That has not been the case. So the FTSE has not considered the shareholding pattern which came post the cutoff date. So Kotak is not added to the FTSE India index, and hence a bit of a negative reaction. Remember, on Friday the stock did correct from the intraday high, so there was a bit of correction as well. But given the fact that last week the stock outperformed the bank index and the bank peers, you might see a bit of pressure in the stock today. But the next review is in December, and given that now the shareholding pattern do classify for the addition, it will come for sure. But for now, to start with, maybe for today, the stock may start in the red.
Okay, Nimesh, thanks a lot for that. That's Kotak to watch out for. Let's go across to Ekta. She's watching out for a couple of pharma names. Ekta?
Well, yes, I'll start with Wockhardt because interestingly, the company has entered into a consent decree with the US Department of Justice, or the US DOJ. As per the consent decree, the company is going to be closing down their manufacturing facility in Illinois in the US. The only facility they have there is Morton Grove, so that's likely to be shut down. Remember, this particular facility was issued a warning letter in 2017 by the US drug regulator. Since then, it really hasn't seen any resolution. The company will now be undertaking its business in the US via contract manufacturing, which they have been for a couple of quarters. The company says there's no financial compensation in the consent decree, which is an important clarification. This is probably going to help them in terms of operating and overhead costs being saved. Remember, for Wockhardt, US is around 12% of sales. It did around 74 crores in Q1. They also incurred an EBITDA loss as a total of 16 crores in Q1, so this should probably aid them in terms of EBITDA loss and margins. AstraZeneca, they have received the Indian permission to use their particular drug Lynparza for another indication, which is basically for the treatment of BRCA mutated HER2 negative high risk early breast cancer. So it's basically allowed to be prescribed for an other indication than what already exists in the market, and hence that should be positive for AstraZeneca.
Oh God, listening to all these names, I think I need some medicines to, cure myself. They're really complicated. I don't know how she does it.
No, absolutely. Well, Ekta, thanks very much for that. More stocks with news flow. Rima is here with that list. Rima, hi, morning.
Hi, morning. So let me start with Adani Power, which said it will acquire DB Power's thermal power plant for an enterprise value of little more than 7,000 crore rupees. Green Lam Industries is the other stock which should be on your radar because they've commenced commercial production and that incremental capacity at full utilization can generate annual revenues of 150 crores, according to the company. Well, Paytm held that much, awaited AGM, where, if you remember, that many of the advisory recommendations were that perhaps you don't vote against Vijay Shekhar Sharma being appointed as the MD, but an overwhelming majority of the shareholders who were present at the AGM have voted that Vijay Shekhar Sharma will be reappointed as the CEO and MD of the company for a period of 5 years. They have also voted on his compensation for the next 3 years. There will be no increment, but his compensation stays at the current levels. Tanla Platforms is another stock that we're watching. Remember, the Q1 earnings were weak, but there is some good news coming in for Tanla Platforms, where their Wisely product, which is a CPaaS platform, has got a patent. And finally, keep your eye on Insecticides India. Well, earlier, the announcement was that the bonus issue, for every 1 share, you will get 2 bonus issues. But now there has been a rectification. For every 2 shares that you hold in Insecticides India, you will get only 1 bonus share. So there has been a clarification and a rectification on the bonus announcement by Insecticides India. Back to you.
All right, thanks a lot for that. So here's a quick recap in case you missed out on any of those stocks. Stocks with positive news flow: there's Shilpa Medicare, GMDC, Walcott, Adani Power, Green Lam Industries, there's Paytm, Tanla Platforms and AstraZeneca. While stocks with negative news flow, there's Kotak Mahindra Bank and Insecticides India. But let's also get a quick handle on what's been happening in the world of commodities and currencies. The dollar index, by the way, is sitting at a fresh 5-week high, so don't lose sight of that. We have Manisha Gupta joining in to tell us all that's happening in that world. Manisha, hi, good morning.
Morning, Sonia. Well, absolutely. From the low of nearly 105 and dipping below that as well, the dollar index rebound has been quite strong at 108, and that really is the binding thread across commodities today, which actually have opened in the weakness. Crude oil prices have continued to decline. We saw 2.5% of a cut in the previous week, and we are trading more than a percentage point down right now as well. The reports that Iran and West are close to striking a nuclear deal clearly is another dampener or a bearish cue that the crude prices are looking at. But not just crude, take a look at the gold and silver prices. We're trading at multi-month lows on that as well. Gold fell 3% in the previous week. Silver was down 8%. And that is the case across base metals as well, with the steel prices now trading below 4,000. Iron ore just about trading at $100 a ton there. You have seen metal prices continue to decline as well. Most of these metals fell 2 to 6% in the previous week, and we have opened 0.5% to 1% on the weaker side in Asia right now.
Okay, thanks a lot, Manisha, for that. Well, inflation worries have dominated the last monetary policy meeting. According to the minutes of the meeting, the RBI governor and the RBI members sound more hawkish on inflation than the external members. One external member, Jayant Verma, says that the MPC stance of a withdrawal of accommodation is confusing. Lata Venkatesh is here with more on the minutes of the meeting and what it could mean for future policy trajectory. Take a look.
Well, one key takeaway clearly is that the Reserve Bank's members in the MPC sound a little more concerned about inflation than the external members. The governor in particular clearly saying that now once they move within the 2 to 6% band, they should start moving towards 4. So that clearly sounds they are more concerned about inflation and its second round impact on inflation expectation. Among the external members, Dr. Verma's dissent to the accommodative removal of accommodation stance seems to be more a dovish dissent, but he clarified that he dissented more because the stance sounded confusing to him. In fact, he seems to be rooting for more clarity by asking the members to vote on a dot chart like the FOMC, which other members were not agreeable. A third takeaway is that Ashima Goyal seems way more confident about the growth part saying that even exports may not be hurt so much by recession. However, Dr. Shashanka Bhide, the main takeaway seems to be that he has some concerns on growth, that exports could be affected by recession, and some concerns on inflation because a lower Kharif can continue to impact inflation. The net from the minutes, one can only say that we are not any the wiser that we were after the August 8th policy statement. It does look like one more hike in October is definitely on the cards, because the Reserve Bank will have to write a letter to Parliament explaining why it failed in achieving a sub 6% CPI for 3 quarters in a row. So a hike definitely looks on the cards in October, but that is exactly what we thought at the end of the August 8th policy statement itself. The minutes are not going to change the market's mind on anything. They will continue to expect a few rate hikes, definitely one in October, but nobody expects that, the Reserve Bank will go on hiking all the way till 6.5% or 7%. So it really is a reiteration of the status quo after the August 8th policy.
Okay, another rate hike and perhaps a reiteration of the status quo. Thanks a lot, Lata, for that. Let's take a quick break. On the other side, Dipan Mehta of Elixir Equities will be joining in for some fundamental stock analysis. Stay tuned. We'll also connect with Aman Desai, the founder and director at Aether Industries.
Back, we have Dipan Mehta joining us, director at Elixir Equities. The global market today a bit soft, so let's see how the market open is. Dipan, good morning. Thoughts first on Kotak Mahindra Bank, which has been a bit of an underperformer. There was some expectation that there would be FTSE sort of inclusion and maybe the inflows, but that hasn't happened. What's your call on the stock fundamentally?
Good morning, Anuj, and thanks for having me on your show. We are very positive on Kotak Mahindra Bank. I think the bank is really well poised to take advantage of the credit growth which is taking place, pristine balance sheet quality. And I think the management's endeavor to grow the loan book, which has been a bit of a disappointment, I think that will be taken very well by the shareholders. A lot of value being created in subsidiaries as well. And valuations also now are reasonable. I think over a period of time, they could have the best-in-class growth rates with absolute safety when it comes to NPAs. So very positive on Kotak Mahindra Bank, could be one of the leading outperforming banks after many years of underperformance to take the road forward as far as bank stocks are concerned.
Dipan, hi, good morning. Is the market looking at a bit of a sort of a crossroads? Are we at that point? We had Lawrence Blanco earlier with us on the show. I mean, purely technical view, he believes so. Any views?
Good morning, Prashant. Again, getting very bullish on the market, making out a list of stocks to buy. It seems to be like a buy on dips market. I know technicals may be pitted against the market. You could have some FI selling as well. But by and large, this earnings season was pretty decent in our opinion, at least for the stocks that we have in our portfolio for us as in our clients. And top line growth remains pretty much strong, and we are getting there to operating profit margins coming to the normal levels or so. And that I think is very positive. Banks, mid-cap software companies, consumption-oriented stocks, especially all the consumers of commodities, I think they may have very good quarters going forward or so. So I'm not at all bearish on the market at this point of time, and corrections may take place, that's part and parcel, but these are good buying opportunities.
Hey, these are good buying opportunities. I want to talk a little bit, since we were talking about the rebalancing. In the FTSE rebalancing, there are a lot of non-index large caps that have been, that are now going to move to the large cap category, right? So whether it's Tata Elxsi, whether it is Gujarat Flora will now be moving to mid cap, so an elevation over there. Varun Beverages as well. These are stocks, TVS Motor, these are stocks that in any case have done well. Because of the FTSE rebalancing, do you think there could be some more focus here?
See, Sonia, I haven't seen how these rebalancing make really a difference when it comes to long-term returns. And there is that intraday movement for 1 or 2 days when the adjustment does take place. But then I think eventually fundamentals come into play. And it's no secret that once the company starts doing well and moves up in market capitalization, eventually it will find itself into most indices. And that's what's happening over here as well. The real game over here is to find out stocks which will eventually enter these indices, which means to go to the ground level and search for the next Varun Beverage, the next Tata Elxsi, and see how it scales up and then eventually finds itself into the index. That's where the maximum wealth is created from an investor's perspective.
So according to you, what's the next Varun Beverage and what's the next Tata Elxsi? Come on, you can give us some ideas.
No, yeah, we can talk about ideas, and again, a very strong disclosure here that we and our clients are invested. So 2 stocks come to mind. One, of course, is Vedant Fashions. We are still studying that company. As you know, they are the market leaders when it comes to occasion wear, and especially marriage clothes. And that is something which you cannot really buy online. So that threat is much less over there. Only issue here is the valuations are on the higher side because it's a pretty well-discovered story. But I think if you get it to the right price point when there's a correction on a weekday, then it could turn out to be an outperformer. Of course, promoters are new, so to that extent, there could be corporate governance risks. The second company which comes to light is Praj Industries, and recently they commissioned a very large ethanol plant based on rice stubs, which is environmentally very friendly and positive as well. The numbers for last several quarters have been exceptional. And in India's journey towards more and more ethanol blending, I think Praj Industries will not have any problem with finding new business. And they have clearly a technology edge and also a great global market to play out to. So these are two companies which are expensive at this point of time, yes. But if you get them at the correction, I think they could be the next real large blue chip companies which will enter these indices.
What about Zomato, Deepan? Is sort of the rally that we had from 45 to 70. You reckon it's done, or would you still look to buy this?
See, Anuj, off the record or on the record, very influential people have bought Zomato. And that's very heartening to note as an existing investor in Zomato right from IPO times. It clearly shows that maybe the roadmap to profitability is clear. And eventually, I think the monopoly situation will play out and they will start to run the business in a more conservative way, conserve cash, and focus on getting the return on investment. And as and when we see that happening, we will find more and more interest in Zomato. It's always going to be an expensive stock, whether it is price to market cap to sales or EV to EBITDA, whichever parameter you look at, because the business is very innovative. It is different. It has got a huge moat, very high entry barriers. And I think as more and more families go in for ordering in, which is going to be a really long-term trend, I think Zomato's long-term prospects are phenomenal. It's just that we need to get a handle on its profitability, on its operating metrics. And when we have some sort of comfort on that level, I think Zomato will do exceptionally well. So we are keeping it on our radar. I would advise investors to have a small investment also in it, not bet the bank, and see how it scales up. Because who knows, 5-10 years from now, it could be something really massive, could be even a multi-bagger. But then the company has to play out its cards properly.
Okay, well, another space I wanted to talk about was the specialty chemical space, and we have a company joining in. So Dipan, just stay on, and would like your view on this as well. Aether Industries is the stock that I'm talking about. It listed on 3rd June at 715 rupees. The stock is currently above the issue price and the listing price, but the margins, the earnings have been slightly on the weaker side in Q1. The revenue growth was tepid. It was just about 7%. The margins actually fell to 26.5% versus 30.7%. They've contracted. To discuss the earnings and the outlook, we're joined by Aman Desai, the founder and director at Aether Industries. Aether Industries is a specialty chemicals manufacturer, and they have 3 business models where they manufacture their own intermediates, and they also do contract research and manufacturing and some exclusive manufacturing as well. Thanks a lot for joining in, Aman. Just wanted to start by asking you about your margin performance, which has been under pressure. Your EBITDA fell almost to 10%. What is the pressure that you're facing right now, and do you think it could extend into the next couple of quarters as well? Aman,
yeah,
I think you're on mute. Go ahead.
Unmute myself. Yeah. So thanks, Sonia, first of all, for having us. Always a pleasure to be here with you guys. Yes, the EBITDA and the profits have fallen by a bit. I think it was 4% that the EBITDA has fallen from 29% to 26% quarter on quarter. And I think that's because of the global softening of the pharmaceutical industry. I think the entire supply chain from the intermediates all the way to the formulations in the pharmaceutical industry are suffering right now. Primarily, we think because of the COVID effect of people just didn't know what to expect and what was next in the COVID pandemic time. And therefore, people had built up inventory, and now we are seeing the effect of that. But overall, we are quite bullish, I suppose, to use a term in your jargon, but we're quite bullish about the year to come, and looking forward to many things to come.
Could you provide us with some guidance for the full year then? Is you bullish and you're seeing things to get better?
Yeah, Prashant, good morning. Basically, we expect Q1 and Q2 of the current fiscal year to be around the same and be a little bit of a softening effect on it. But especially in Q3 and Q4, we have the new greenfield manufacturing site coming up, which is on track to be commissioned by the end of this calendar year, December. And so we'll see a reasonable, significant brunt of revenues from it coming in the last quarter of this fiscal year. And also, in terms of the CRAMS market, contract research and contract manufacturing market, we are seeing a tremendous influx of opportunities, as we had always foreseen in a post-pandemic era where the countries are opening up, the companies are opening up, and the external programs are being started. And so we see that effect also coming in the Q3 and Q4 of this year.
Aman, good morning. So apart from your organic plans, do you have any inorganic plans as well? Do you have any sort of targets in mind, any potential sort of kitty that you have for acquisitions?
Yeah, thanks, Anuj. Basically, no, right now. Currently, we have two new greenfield manufacturing sites coming up, our Site 3 and Site 4. And also, I don't know if you remember, but we also have a Site 5, which is a 31-acre plot of land bought in Panoli GIDC, which will be 12 times the size of our current production site. And so we are also kind of planning towards that. After Site 3 and Site 4, we have doubled our R&D, already operational. Tripling is going on right now and will be operational by this month. We have tripled the pilot plant capacity. We are adding a lot of customers, adding a lot of manpower. And so current focus is on organic growth and organic expansion. Very preliminary discussions happening on inorganic M&A type of activities, but at a very preliminary stage and at a very small scale. And so nothing as of now.
Okay, so what is the revenue expectation from Site 3 once it comes on board?
Well, we are typically have a ROCE, the return on capital of approximate 2 is what we have always done historically, and we are looking at almost 190 to 200 crores of capex on Site 3, and so I don't want to kind of put numbers out there, but hopefully significant numbers coming in.
Okay,
and that you'll see the full impact of that in the next fiscal year, but definitely a reasonable and significant impact in the last quarter of this current fiscal year.
Okay, that's good to hear. So you're sitting on a base of around 600 crores in FY22 is what I'm talking about. On an average, what kind of growth can you see in FY23 and 24?
Well, so you will have FY23. You will have the last quarter getting contributions from the current upcoming greenfield manufacturing site number 3, and you will see the full brunt of that of the 200 capex in the revenue contribution coming in the FY24, and so we are hoping for significant growth. Again, I'm very hesitant to put out numbers out there, but definitely very bullish on the future plans, especially in the manufacturing, and also as a result of the various tie-ups and strategic associations that we have established at the highest technical echelons of various innovators across the industry spectrum in the contract research and contract manufacturing space. And you'll see all of that coming into play as well by the last quarter of this fiscal year and the next fiscal year for sure.
So because I understand that you are a pioneer in continuous processing instead of batch processing, is that something that gives you an edge over other competitors, or how does it work?
Yeah, thanks, Sonia. A great question. I can talk about continuous technology and flow technology for, I think, 2 hours, and I don't think you want that. But absolutely, we are one of the pioneers, I believe, firmly in the country. If you go to companies who claim to have this competency and actually analyze the assets that they have and proven case studies at the R&D scale, pilot plant scale, and production scale, I think you come and see our capabilities, you'll find a vast differentiation in the footprint. And we have been one of the pioneers. This was one of our foremost competencies that we focused on when we started the company 9 years ago, and we continue to focus on that. And absolutely, yes, there's tremendous advantages that are obtained from translating a process from batch to continuous in terms of footprint, in terms of capex, in terms of opex, in terms of efficiencies, in terms of productivity, in terms of yields and conversions, which ultimately lead to cost competitiveness. And we see the benefits of this tremendously.
That was my question actually. Does it lower your costs quite a bit? If yes, can you quantify it for us? And does it improve the quality as well?
It definitely lowers the cost. You should be a little cautious. Not everything can be done in continuous. Primarily, the chemical industry is batch-driven, specialty chemical industry, but there are 15 to 20% cases which should be translated to continuous, which we do. In terms of quantification, it's very difficult to provide. It's a case-by-case basis, but at an average, you can consider a cost competitiveness on the range of, say, 15 to 20% that can be obtained in a per kilo basis on a product, which is a good fit for continuous technology. In terms of quality also, the specifications are fixed for the customers, and so the quality has to be achieved, but the process to establish the quality might be easier in some cases from continuous processes as compared to batch processes.
Okay, thanks a lot for joining in though. It was great chatting with you and understanding the nuances of your business and the edge that you have. That's Ather Industries. Dipan Mehta is still with us. He tracks Ather closely. Dipan, any thoughts on what the management said? And at this price, 860, how does the risk reward look?
Yeah, I think we have one more company which certainly fits the criteria for moving up into the mid and large cap indices. And that's the thing about investing, Sonia, in this country. The outstanding businesses are expensive, as is Ather, 100 times plus trading 12 months. And really the trick is to find them at the right price point when the earnings are moved up and the price earning multiple has compressed, or there is tremendous weakness in the market and the stock price corrects. What I think the management did not say that they're the number one, number two player in a lot of products. And that really, I think in such a short period of time is quite an achievement for the company. And as and when I think this China plus one strategy continues to roll out, this is one company which will benefit tremendously. But as I said, I just want to wait and watch because of the expensive valuations that the stock is trading at just now.
Okay. Dipan, any views on this company called Gensol, which is, I was looking at the price. The 52-week low was $8 at 1,300 now. They've done a preferential issue. The list came out on Friday, and basically it's an EV story now. I mean, they were into solar panels. Now they want to make EV vehicles, EV autos and cars, etc. Yeah, go on.
No, Prashant, I'm sorry. Maybe it's one company I should try to look up at this point of time. I have no clue about this company.
Fair enough, no problem. I had to look it up myself, but we'll have. That's an interesting list. The preferential issue happened at about a little over 1,000 rupees. So after the run-up that we've seen, but of course, I mean, anything with EV tag to it starts to get bid up. Well, we'll take a very quick break here. Deepan, of course, stays with us. We'll also get you a technical perspective. Mitesh Thakkar and Sudarshan Sukhani will be with us for some market talk with their trading ideas in just a bit.
For fresh technical calls. Gentlemen, good morning. Sudarshan, after Friday's decline, has the market texture changed, or is this a market in which you would still look to buy?
Good morning, Anuj. Well, at this point, it's a market in which we want to buy, not today, but at some point. It's only one day of declines. And a decline is normal after that big run-up that we saw. The second point is that once some kind of a dip begins, that normally lasts for 2 to 3 days. So today is not a good day to go and buy it, but I'm not looking to go short anyway. So today is a day when we see what the market does. So it's an avoid for me for the Nifty and Bank Nifty both. But the opportunity is only on the long side as of now.
Right. So it's an avoid on the Nifty and Bank Nifty both. Mitesh Thakkar is also with us. Mitesh, what would you do? The market has good gains under its belt, but looks like it's going to take a bit of a breather. At a time like this, what's the index level?
Good morning. Sonia, my sense is that Friday did indicate some kind of a corrective movement start on the index. Now, it will not end in a day or two. So it will be choppy, volatile, but with mild downward bias for the next few days. But the overall picture for me remains very positive and a bullish one. So, I think I would want to buy it out, but not immediately. Maybe in the next few days, as we see the index kind of get closer to about 17,500, 17,550 levels. I think, and then we see some kind of, support coming in. That's the best level to possibly explore and get aggressively long. Till then, I think, you want to trade it out. 17,550, 500 is the first support area, as I mentioned. In case we get slightly deeper, then it could be 17,420. But I think around those levels, my sense is that this correction will possibly bottom out. If not immediately start an uptrend, at least it will give you bounces which you can trade on the long side.
Okay. In fact, before we discuss individual stocks, if you can just bring back that line on the Nifty, that channel. Mitesh, I don't know if you've looked at this this channel and this the trend line. I'm asking for the sort of longer term ramifications on the Nifty, if any.
Anuj, I have. In fact, last week's high or last week's candle becomes the fourth touch point for this trend line. And yes, I think, weekly closing above 18,000 would definitely get us into very strong and a position kind of a bull market. But for the time being, I think we've kind of rallied from levels close to 15,150 to this trend line at about 18,000, 18,050 odd levels. And now I think is the time when you will see some kind of a correction and a pullback start. But the good thing is that with that movement of 3,000 points on the upside, the medium-term indicators have become stronger and are clearly now rising. They've easily come out of the overbought kind of situation, and therefore I think this becomes a market on decline. But as I said, since the rally was of 3,000 points, the decline will not end in a day. So maybe over the next few days, as you see a 500, 600 point kind of a cut, that's where I think the immediate supports come.
Okay, then let's talk about stocks. Sudarshan, what's on your list?
Well, it's a mixed scenario because the markets could be choppy and as they try to consolidate. Tata Communications is a buy. The stock actually had a very good day on Friday, even when the markets were going down. That by itself is a good sign. Momentum has turned up. The relative strength is strong. It's outperforming the Nifty. Buy with a stop under 1,085. GAIL continues to be a short sell. The market never participated in that stupendous rally we had in the Nifty. It's an intraday short with a stop above 136.50. Intellect is also a short sell. Same problem for the last 1.5 months. It's underperforming the Nifty very clearly. It's an intraday short with a stop above 637. And finally, my last trade is a buy. That's Dabur. Dabur was in a consolidation, and on Friday it actually broke out of the consolidation, although it retreated back because the markets itself were a little dull. But it's worth buying into with a stop under 575.
Okay, and what about you, Mitesh?
See, in the short term, I've got more sell ideas today. A couple of auto names feature on the list. I think they've had a good rally, so they can give a significant or a proper kind of a pullback. So I have a sell on Maruti with a stop at 88.35 for a target of around 86.50. M&M in the short term is a sell with a stop at 12.53 for targets of 12.06. And Balkrishna Industries is a sell with a stop at 21.90 for targets of 2100. On the long side is Adani Ports, keep a stop at 8.55 for a target of 900.
Okay. Thanks, gentlemen, for those calls. Well, Manoj Muralidharan is also joining us from Religare for some FNO calls. Manoj, hi, good morning. What would be your ideas, trading ideas for the day?
Good morning, Anuj. Anuj, when we started this August series, the Nifty has rallied a good 600-800 odd points. That is the first thing. And if you see the difference in the long run cost, your August and September difference in the Nifty future is a good 85 odd point. That usually is not the 3 months average, I would say that. So, and when you have global trends coming in, or maybe nervousness in the global market with the VIX almost at 18.6 and the dollar index also closer to 108, this clearly says that, the weighted average price of 17,500 to 550 is where we might see the overall pickup. So we are expecting the Nifty to be on a sell on rise. 17,900 to 920 might be the resistance and 17,500. So better strategy because there would be volatility. To go for a put spread, buy a 17,800 put option closer to around 150 odd rupees, and you hedge it by selling a 17,550 put option at 70 rupees. So that gives you a spread of around 50 to 60 rupees. The target would be around 100 on that.
Okay. Manoj, what are the stocks that you're looking at today?
The stock specifics only, I guess, Tata Steel is one where we can still go with this weekly expiry, the 28th August strike. So 110 strike for Tata Steel. Try to buy the put option closer to 1 to 1.5 rupees, and the target will be close to 4 rupees on that.
All right. Thanks a lot, Manoj. Have a good day and all the best. That's the word coming in from Religare Broking. Let's take a quick break. On the other side, we'll have the pre-opening.